Let's take a look at the Wall Street close, because this is where all the action occurred really yesterday. And as I said, the S&P 500 closing in bear market, down 22% from a record high. But you can see, broadly speaking, it was certainly tech stocks taking the main brunt of the sell-off, which has been the case for so long in this bear market that we've got building here. Let me show you this chart here. This is the S&P 500. At this spike down here on the 20th of May, we were down over 20%, 20.4%, I think it was intraday, but we didn't see a closing low. This closing market yesterday was down 20%, 22.47% as at the low point in intraday yesterday we saw for the S&P 500. But it was the, as I said, the tech index, which is really taking the brunt of this. And you can see here, I've left that 31.48% drop that we saw there at the lows back on the 19th of May. But let's pull that down now to show you where we are now, having lost almost a third of the total value of this market from the record highs we saw back in November last year, with the NASDAQ taking the brunt of that. S&P 500, just going quickly back to that, we've got a lot of NASDAQ stocks in the S&P 500 now. In other words, it's got more of a tech twist to it, which is why the S&P is down heavier than the Dow Industrials. This is the Dow, down, beating that 17% drop intraday yesterday. And you can see here closing just above that total retracement of the pattern that we have got from that low we had there. Intraday, we saw a drop below the total retracement, but then it rebounded, closing just above that 30,633 level. Again, I think this is just a technical bounce, MACD pointing lower. A lot of people looking for good excuses to continue to sell this market down. Any upside could be an opportunity for them to come back into the market and sell further on down into this trade. And of course, on the IG platform, you go short on this. Any of these trades, if you want to go short, your stop goes above some of the recent moves that we've seen with a view to taking this market lower. And the next line of support, which you can see here on the Dow, for example, goes back to the 4th of May 2021. The next line of support is below the 30,000 level. We haven't been down there since January 2021. And then further on from there, there's not much, then catching it down to the 26,000 that we saw, which were the lows we had back on the 27th of October 2020.